On the 1st of March, 2026, 12 insurance organizations sent out the same message on the same day. Each one gave 72 hours notice. After that, their cover for ships in the Persian Gulf was canceled. Together, these 12 organizations insure 90% of every ocean-going ship on Earth. When they walked away, the global shipping industry had 3 days to find a replacement. Most couldn't, and so the ships stopped moving. These organizations are called P&I clubs, and in this episode, we are going to understand exactly what they are, how they work, and why their decision in March 2026 helped shut down one of the world's most important shipping lanes. P&I stands for Protection and Indemnity. A P&I club is a mutual insurance organization, meaning it is owned and run by its members, not by shareholders. The ship owners are both the insured and the owners of the club. They pool their risks together. Now, you may remember from episode 1 that war risk insurance and hull insurance cover the ship itself. But who covers everything else? That is where P&I comes in. P&I insurance covers third-party liabilities. Think of it this way. If your ship collides with another vessel and sinks it, that is not covered by your hull policy. If your tanker leaks oil and destroys a coastline, your hull policy does not pay for the cleanup. If a crew member is injured at sea and sues the ship owner, that claim goes through P&I. These are the liabilities that can run into hundreds of millions of dollars. And without P&I cover, no port in the world will let your ship dock. Here is what makes P&I clubs very different from a normal insurance company. When you buy car insurance from a commercial insurer, they take your premium, invest it, and pay claims from the profit. They make money when claims are low. P&I clubs work differently. They are non-profit mutual organizations. Every ship owner who joins the club pays what is called an advance call at the start of the year. This is an estimated premium. If claims across the club are higher than expected, the club issues a supplementary call. Every member pays more. This model means the risk is shared equally across all members. A large tanker owner and a smaller bulk carrier operator, they are in the same pool. When a major claim hits anywhere in the club, everyone contributes. This is both the strength and the vulnerability of the model. It creates deep solidarity between members, but it also means one catastrophic event, like a war in the Persian Gulf, forces the entire club to reassess its exposure. There are 12 major P&I clubs that form what is called the International Group of P&I Clubs, or simply the IG. Together, these 12 clubs cover over 90% of the world's ocean-going tonnage. That includes tankers, bulk carriers, container ships, gas carriers, virtually every commercial ship on Earth. Now, no individual club can absorb a catastrophic claim on its own. So the International Group operates a pooling arrangement. When a claim exceeds a certain threshold, currently around $10 million, it is shared across all 12 clubs proportionally. This is called the pool. Above the pool, the clubs buy what is called group reinsurance, cover purchased from the commercial reinsurance market, including Lloyd's of London. This is the critical link. When commercial reinsurers decided the Gulf was too dangerous and withdrew, the P&I clubs had no backstop for catastrophic losses. Without that backstop, they had no choice but to cancel war extensions too. Standard P&I cover excludes war risks, just like hull insurance. To operate in a war zone, a ship owner must attach what is called a war extension to their P&I policy. This is an additional clause, usually added for a specific voyage or a specific trading area, that brings war risks back into scope. When the International Group Clubs issued their cancellation notices on the 1st of March 2026, they were canceling exactly these war extensions, effective from the 5th of March. What this meant in practice: if your ship was in the Persian Gulf after the 5th of March and it was damaged in a war-related incident, your P&I club would not pay the liability claims. You, as the ship owner, would be personally exposed. Think about what that means. A VLCC tanker carries 2 million barrels of oil. If it is hit and spills, the environmental liability alone could reach hundreds of millions of dollars. No ship owner in the world would accept that exposure on their own balance sheet. Let us make this real with an example. Imagine you are a Greek ship owner. You have a VLCC worth $120 million, chartered to carry Iraqi crude from Basra to South Korea. The voyage goes through the Strait of Hormuz. On the 1st of March, your P&I club sends you a cancellation notice. You have 72 hours to find new cover, or your ship loses its liability protection. You call your broker. Your broker goes to the market. The market says, "We are not writing Gulf War extensions right now. Not at any price." Without P&I cover, the port of Ulsan in South Korea will not grant your ship entry. Your charterer will not load the cargo at Basra. No letter of credit will be issued without a valid insurance certificate. The entire trade chain, from the oil field to the refinery, stops. Your ship goes to anchorage. And every day it sits there, you are paying $50,000 to $80,000 in vessel operating costs, earning nothing. Let us briefly name the clubs that issued those cancellation notices, because you will come across these names in your career if you work in shipping, trade finance, or maritime law. The clubs that canceled Gulf War extensions in March 2026 include GUARD, Scold, North Standard, the London P&I Club, and the American Club, among others. These are not small organizations. GUARD, based in Norway, is one of the world's largest marine insurers. Scold, also Norwegian, covers some of the most complex offshore risks on Earth. North Standard was formed in 2023 from the merger of North P&I and Standard Club, two of the oldest clubs in the world. When you see a blue card issued by a P&I club, a document that proves a vessel has valid liability insurance, you will almost always see one of these names on it. Ports, governments, and financial institutions recognize them as the gold standard of maritime liability cover. The story does not end with cancellation. From late March 2026, Iran began selectively allowing certain vessels to transit the strait. Ships flagged by China, Russia, India, Iraq, Pakistan, Malaysia, and Thailand were granted access. As political conditions shifted, some P&I clubs began offering new, voyage-specific war extensions for qualifying vessels. The price was significantly higher than before the crisis, and the terms were far more restrictive. This is an important lesson about how P&I cover works in practice. The clubs did not disappear. They adapted. They repriced the risk. They added exclusions. They moved from blanket annual cover to voyage-by-voyage assessment. As one market analyst put it, the system did not stop. It adapted. But it adapted in a way that made shipping far more expensive, far more selective, and far less predictable. So let us recap what we covered today. A P&I Club is a mutual nonprofit insurance organization owned by shipowners, for shipowners, that covers third-party liabilities at sea, crew injury, oil spills, collision damage, port liability. The 12 clubs of the international group together cover 90% of the world's ocean-going fleet. They operate through a layered system, individual club retention, a shared pool, and group reinsurance from the commercial market. When reinsurers withdrew from the Gulf in March 2026, the clubs had no backstop. They canceled war extensions. Ships lost their liability cover. Ports closed their gates. And the global tanker market simply stopped. If you found this useful, please subscribe to Trade and Shipping Explained on YouTube and follow us at TNS Explained for every new episode in this series. In the next episode, Episode 3, we are going to break down the difference between hull insurance and war risk insurance. Two separate policies, two very different payouts, and one very important question. When a drone hits a tanker, which one actually pays? That is Episode 3, coming in few days, only on Trade and Shipping Explained.